like every other market, it'll overshoot probably to the downside and then correct back. So yeah, that's probably good guidance to wait on a purchase if you can.
Let's see, home prices. Another thing that, and this is going to be a big one coming up for sure. You got rising rates, and the U.S. 30-year fixed is now over 7%, and you got that actually equals a 28% year-over-year decline in housing affordability. So the big question is, are we going to see a big housing recession? Which is a big part of people's net worth, a big part of what drives GDP. So it's an important thing. But one of the things that we read is that 90% of current outstanding 30-year fixed mortgages are at an interest rate below 5%. Remember, we've had such a long period of low interest rates that most people who are buyers or had been buyers have refinanced and actually have pretty decent interest rates. And you got adjustable rate mortgages in the minority versus, compare that to a 2006, 2007 environment where lots of adjustable rate mortgages. And so looking at home prices probably declining. I mean, it's hard to imagine that they continue to increase at the pace they've been increasing, but probably not a big housing recession as from, again, what we've read and what we've seen.
We talked about this as it bleeds into inflation also in the calculation of how CPI works, with real estate being such a big factor. I think we're going to get into the waning or at least peaking inflation and where we've been, but with what you're talking about, with mortgage rates going up so much, you're starting to see a lot of reduction in home prices that are for sale, and again, that just indicates a slowdown in prices rising. So whether or not they go fully negative is a different story, but just the slowdown in growth rate is going to be huge for CPI.
I think too with home prices, because I mean this is obviously not a lot of our minds, and I talk to people too that don't even have homes yet, and they're thinking, I'm waiting for this big market crash so I can go out and buy, and where I look at it too, people. The most recent memory we have of a real estate crash is obviously going back to 2008. But I mean, this is such an absolute different period where the data I was reading that back in 2007, the average credit quality or the credit score rather of a mortgage holder back in 2007 was in the low 600s. I mean, they were really just giving debt out to anybody who wanted it. If you had a heartbeat, you didn't even need a job and you were going to be able to get a mortgage. And now the average credit score of mortgage owners in this country is in the mid to low 700s. And so it's considerably higher quality. Anyone who's gone through the mortgage process over the last few years knows what that feels like. The banks are far more strict on who they are giving money to. So before in 2007, you just had massive foreclosures and everything was just crashing in that sense. Now it seems like you're just gonna have lower volume. If someone's got a 3% mortgage, they're gonna be less apt to move and take on a new mortgage. They're probably gonna remodel their existing home. So is that going to crash the real estate market? Probably not. I mean, could it give back a little bit of what it gained over the last 2 years? Sure. But it's a little bit different more. You're having buyers who are just less excited. And that's really the slowdown that we're seeing. And so people are just going to stay in their homes a little bit longer, most likely until rates normalize or come down a little bit.
Yeah, talk a little bit about the car market too. Another area where we've just seen, again, you put a big supply of money into the economy, and used cars. I mean, you got new cars selling over MSRP, and is that starting to turn around a little bit?
Yeah, I think most of us are familiar that when COVID hit and the major auto manufacturers were on a hold, it was really, and everyone had more money too with all these stimulus checks. It was really hard to get a used car, and you heard crazy stories too of someone buying a truck and then selling it 3 months later and making 10 grand on it. I mean, it was obviously an abnormal market. And so now we're starting to see anything that gets way extreme starts to normalize. And then with the rise in rates too, there's a lot of folks out there that have adjustable car loans, car loan rates. And so they're obviously, if they could barely afford their car to begin with, the repossession market right now is running the highest it's been in multi-decades. And so the inventory is building up. I've got a chart that kind of shows what's happening in the car market. I'll pull that up here in a moment. But before that comes up, one thing that I would mention as well, if anyone is attempting to or needs to purchase a car, I would recommend holding off 3 to 4, maybe even up to 6 months if you can. It's going to be quite likely that over the next few months that we see the used car market, which would affect pretty much the entire car market, most likely slow down. I don't know if my chart's able to load, but essentially what the chart is going to show you is the median price of used cars and how it's completely, it went to the moon back in 2021, and now we're seeing it starting to correct. And so that we're seeing that in a lot of the markets, but cars especially.
Well, a lot of that was driven by inventory too. Part of
Yeah.
COVID was the supply chain issues and the backup of parts, chips and
Right.
things that were backed up. We remember back in November last year, all the ships that were kind of stuck in the harbors in Long Beach down in Southern California there. And so I think that as that's starting to kind of back off a little bit, inventory is kind of catching up, and that's going to help, demand with the come down with the higher interest rates. And then obviously supply builds back up. That should help lower those prices overall too.
Agreed.
Yeah. So
and like every other market, it'll overshoot probably to the downside and then correct back. So yeah, that's probably good guidance to wait on a purchase if you can.
So again, not going to stay right along that average line or within a very small window.
There you go.